Okay, so we are watching a technological build out of, well, historic proportions. I mean, trillions of dollars are pouring into artificial intelligence right now. But here's the big question. Is this the start of a whole new industrial revolution? Or are we all just watching a giant, dangerous bubble get bigger and bigger? Let's break down what's really going on. All right, get ready for a pretty wild number. By 2030, the annual spending on AI infrastructure is projected to hit $2 trillion. 2 trillion. Now, to wrap your head around that, that is more than the combined 2024 revenue of Amazon, Apple, Microsoft, Meta, Nvidia, and Google's parent company, Alphabet. All of them combined. What's really fascinating is how people on the inside are talking about this. One analyst put it perfectly. They said, big tech right now is doing the equivalent of building Vegas in the 1950s where it was just sand. Think about that. We're not just funding some new app or product, we are building the entire foundation for a future economy, from the chips to the data centers, all the way to the power grid itself. And that brings us to our first big topic here, the 2 trillion gold rush. Make no mistake, we are in the middle of one of the largest and, frankly, fastest technological investment sprints in history. And just look at how fast this is moving. The projection jumps from $330 billion in 2025 to $500 billion just 1 year later. And then it quadruples to that $2 trillion mark by 2030. This isn't some slow burn, It's a full-on explosion of capital. So, this leads to the most important question of all. Where does all this spending actually go? That takes us to our second section, bubble, boom, or bust. We're going to dive into the two completely opposite stories being told right now. For a lot of investors, there's this ghost in the room, right? And it's asking this one question. Is this just another dot-com bubble? Are we just making the same mistakes we did in the late 90s, throwing insane amounts of money into unproven tech and just hoping for the best? And this really shows you the two sides of the coin. The bubble argument says, look, money is flooding into tech that hasn't proven it can make a return. All this spending is fueled by debt, and it might just be hiding a pretty weak economy underneath it all. But the supercycle argument says, no, this is different. This time it's backed by the gigantic profits of the big tech companies, it's being driven by a sort of tech arms race between the US and China, and it's a solid 5 to 10-year trend, not just some flash in the pan. Now, this whole supercycle idea is really important to understand. It's not just a normal business cycle. The people who believe in it see it as a complete reshaping of our economy, kind of like when we built out the railroads or the electrical grid. It's a time where companies just keep up this crazy pace of investment for years and years to build the entire infrastructure for a technology that's going to change everything. Okay, let's zoom out a bit and see how this all paints a much more complicated picture of the economy. This brings us to our third section, the K-shaped economy. And this is where things get, well, a little unnerving. An analysis from Deutsche Bank actually suggested that if you take out all of this AI-driven investment, the US might already be in a recession. So think about what that means. The AI boom isn't just some hot sector on the side. It might be the only thing propping up the entire economy, hiding some major weakness everywhere else. So this all leads to the idea of a K-shaped economy. And it's pretty much what it sounds like. It's when an economy recovers, but different parts of it split off in dramatically different directions. Imagine the letter K. One line shoots up, and the other line trends sharply down. That's the idea. Two very different realities happening at the same time. And this slide really breaks it down. That top leg of the K, that's for asset holders. People who own stocks, real estate, they're actually doing better than ever. But that bottom leg, that's for everyone who doesn't have those assets, people who are living paycheck to paycheck and who are falling further and further behind because inflation is just eating up their wages. So what does all this high-level economic talk mean for us, for our day-to-day lives? That brings us to a super important question in Section 4, AI in your job. How does all this play out in the labor market? Well, the picture is surprisingly specific. I mean, if you look at where jobs have been growing in the US recently, a whopping 70% of that growth has come from just two places, government and healthcare. So that tells you the job market isn't lifting everybody up equally. The growth is really, really concentrated, which is a bit risky if those two areas start to slow down. And then you have this. The International Monetary Fund estimates that 60% of jobs in developed countries are exposed to AI. Now, exposed is the really important word there. It doesn't automatically mean those jobs will be replaced, but it does mean that for a huge chunk of the workforce, a massive change is coming in the skills we need, the tasks we do, and maybe even the value of our labor. So, with all of that on the table, what happens next? Let's move to our final section and look at the key factors that are going to decide whether this whole thing ends in a boom or a bust. For this spending spree to keep going, it really depends on three key pillars holding up. First, borrowing conditions have to stay favorable. Basically, it needs to stay pretty cheap to get money. Second, you need strong corporate profits, so these giant companies can keep funding the expansion themselves. And third, you need investors to stay confident and willing to keep placing these huge long-term bets. But there is a very powerful argument for why this boom is going to keep right on rolling, and that's the multiplier effect. As one expert put it, every dollar spent on an NVIDIA chip is a 10 multiplier across the rest of the stack. What that means is the spending could just ripple outwards, boosting everything from construction to the power grid, and basically lift the whole economy with it. And that leaves us with the ultimate question, doesn't it? Is AI going to be the engine that kicks off a new era of incredible growth and productivity for everybody? Or is it going to be the great divider, speeding up that K-shaped economy and leaving a lot of people behind? Honestly, the answer to that question is going to define our world for decades to come.